All right, guys, we are here with Matt from Kingdom Trust. We are actually recording this live in front of a bunch of people that you can't see staring back at us. So we're going to try to keep this entertaining both for those listening at home and those here in person. Thank you so much for coming.
Yeah, it's good to be here.
Awesome. You've got a wild story, so let's just start at the beginning.
A wild story.
No, I think there's a lot that you guys have done that people don't know, so maybe let's just start with kind of your background before you started Kingdom Trust.
Yeah, so I was in the real estate business before I started Kingdom Trust. Did all kinds of different real estate investments, real estate syndications, things such as that. And then in 2009 was when I guess the idea of Kingdom Trust was born. In late 2008, we actually put it to action in 2009.
Got it. And contrary to popular belief, Kingdom Trust had nothing to do with crypto in 2009, right?
No, in 2009, I'd never heard of crypto. So Kingdom was actually founded to be a different kind of custodian than what most folks are used to. So Kingdom was founded to custody unique assets, and the idea behind it was to empower investors to invest in through a qualified custodian, have the ability to invest in unique assets that are, either illiquid, non-publicly traded, hard to value, hard to store assets, such as physical precious metals, private securities, anything non-publicly traded that the larger custodians, for whatever reason, aren't interested in, but are still really good, viable investments. We wanted to empower investors to be able to self-direct and buy those investments, and that's how the company was founded.
What gave you the idea to do this? Was it something that you tried to, custody an asset that another custodian wouldn't do, or how do you come up with this?
Yeah, it really came through the real estate. We were taking investors into different real estate projects, and I personally had a retirement account that I wanted to invest in what I knew and what I understood, and that's really where it began. Yeah.
Got it. And then what's the first asset that you custodied? Was it real estate?
I'm not actually sure what the first one was. I was the first one to open an account, so it probably was real estate.
What was the conversation with the first person not named Matt that you went to get somebody to open an account with you?
To be honest, when we first started the company, it was nearly 2 months before the phone rang the very first time. I don't remember exactly what that first phone call was about. I wasn't the one that took the call, but it was slow in the beginning.
Yeah.
We founded it from scratch, so to speak. Mm-hmm. We didn't have a book of business. We didn't buy a book of business. We didn't buy an operating company. We started with nothing and went and got a startup. As a startup, got a trust charter back in 2010, and just started beating the bushes and going out and talking with people, and pretty quickly physical precious metals was pretty quickly where we started seeing some of our growth. Private securities was probably the next. We do a lot of non-publicly traded REITs and things like that. Real estate actually is one of our smaller asset classes, but yeah, that's where it all began. Peer-to-peer lending, private loans are a big asset class for us as well. And then obviously now crypto is our focus and our largest growing part of our business. But we're still very involved in all those different asset classes, and we're very proud that we have a very diversified portfolio, which I think anyone looking at a custodian wants to see is someone who's all their eggs aren't in one basket, so to speak.
For sure. Well, before we get into crypto, you had over $10 billion in assets before you got into crypto, but I want to talk about two things first. So one is you're building a company in Kentucky, which is not Silicon Valley, not New York, not Zug or Asia.
Right.
I'm assuming you started there because that's where you're from, but just talk a little bit about the benefits and challenges of building a company outside of those kind of traditional tech hubs, given what you guys are doing today.
Yeah, I think in the early stages it was really challenging. Obviously, and it is there because it was my home. And as the founder of the company, I started the business in my hometown. And we
You sound like you're from New York.
Well, that's good. That's good. That's good. So, yeah, there was a lot of challenges in the beginning, particularly when we were smaller and unheard of, and we were from Kentucky, which is not one of the financial hubs, obviously. But, over time, we grew our business. And as you said, before we ever even got into crypto, we were well over $10 billion in assets under custody. So over time, as we met people in the industry, we started doing a lot of work for some of the larger, some of the biggest custodians in America actually refer business to us because we custody assets that they don't custody, and they had clients who needed custody. They would refer them to us. So we built relationships, through all different sorts of channels and in different ways. And as we've grown, we became much more respected in the industry, and I think also very well respected in how we custody assets. Is when people learn that as a directed custodian, most people don't understand that. They don't understand qualified custody, as we were talking about. A lot of people don't understand that, but they also don't understand what a directed custodian.
All right, so let's go through like a 101 in custody, right? So just what is a custodian, and what services do they provide to the market?
So a custodian in general is anyone that you give that you entrust to secure something for you, basically. And when you get into the financial markets, it usually involves holding the asset and reporting the asset. That's the role of a custodian, is to safekeep the asset. That's really the better word to use, is a safekeeper. And then to report those assets in a manner that according to the client's needs, that keeps them compliant. It's a transparency thing that came down through the Dodd-Frank Act. So when we hold assets, we report those to the need-to-know parties, which in some cases is the underlying investors behind a fund. Rather than just reporting it to the fund, we report it to the underlying investors in the fund. As a transparency, that was all spurred through the Bernie Madoff and some of that happened way back when. So that spurred a lot of those regulations. So typically in the financial world, that custody's done by what's known as a qualified custodian.
So there's two pieces here. There's qualified custodian and there's a directed, right? Mm-hmm. Let's go through the qualified custodian, because I think a lot of people hear, qualified custodian is coming into crypto, right? Or somebody got the regulatory approval. They actually don't understand what that means, right? It's one of these things, everyone shakes their head, yes, I got it. Nobody actually knows. So what is a qualified custodian? Why is that important?
It's not a designation that you go get and you get this tag name of a qualified custodian. Qualified custodian comes from the 40 Acts. There's two of them. The Investment Companies Act, the Investment Advisors Act. There's actually two different ones, and we're a qualified custodian under both of those acts. And the requirement there is you have to be a financial institution, and broker dealers, banks, trust companies fall under that. But you also still have some requirements you have to meet within that. So purely being a trust company doesn't necessarily make you a qualified custodian. There is a few other rules. We don't want to get real deep into that, but so essentially it is a regulated financial institution, and when a regulated financial institution takes on custody of customers' assets, there's rules, regulations, audits, things that they have to go through in order to do that is for the protection of the consumer. So if you use a non-qualified custodian, they don't have those audits, they don't have those regulations, third parties looking over their shoulders, like we do as a regulated financial institution.
And I think the reason why it's important really is if you're a large institutional investor, the odds are you're going to want to work with the qualified custodian, or you may even have to in your part of your due diligence process, for example, because they need the peace of mind around those audits and kind of the checks and balances that are required for a custodian to meet those criteria. Is that correct?
Yeah, certain advisors reach certain limits, and even certain products, whether it's SEC, CTFC, there's certain ones who are required to use a qualified custodian, but it's certainly best practice for anyone who is investing other people's money to keep those assets at a qualified custodian.
Got it. And then let's talk about directed, right? And kind of what that means, because I think a lot of people, again, they don't even hear that as much as the qualified side. They don't know what it means.
Yeah, and that's where it's really different, because we're a qualified custodian and a directed custodian. So what that means is that our clients, as I told you, Kingdom was founded on the principle that the individual or institution who owns the asset should always control the asset, which is very much the same principles, ironically, that blockchain and crypto has been founded around. So
I have no idea how you made your way to crypto.
So a directed custodian only uses the client's assets, only moves the client's assets, only does with the client's assets what the client directs them to do. We charge fees for custody. You see a lot of the big custodians, in the country. I hear it all the time. Well, they do custody for free. Well, they do, but they put your assets on their balance sheet. They go and they leverage your assets, and they loan your assets and rehypothecate your assets, which is a big topic in crypto today. They make the spread on that, right? I mean, that's how they make their money, and it's way more than the fees that we charge. Those spreads are, so it's, we hear all the time that that's the business we should be in. We haven't chosen to go to that route because we believe that as a directed custodian, sure, if you want to leverage your assets, you can do that. We have partnerships and integrations with people who can provide that leverage, allow you to that matches up borrowers and sellers, and actually, you pay us a small fee for custody, but you have access to do your own leveraging of those assets, and in many cases, it's much better for the client who owns that asset to be the one receiving the interest on it as opposed to someone else. So, so the directed part of it. Really, one of the key things is we don't put your assets on our balance sheet. We don't take, we take title of them. Mm-hmm. We have to be considered in custody, and we do have the effective control. But by way of contract and through our regulatory, the way we set this up with our regulators, we don't put them on our balance sheet, and we don't do anything with those assets unless our client tells us to, and it gives the client complete control of the assets at all times, and there's nothing going on behind the scenes that they're unaware of.
And so, once you got the qualified custodian, directed custodian set up, start out with precious metals, real estate. What's some of the weirder things that you've had to custody?
I knew you were going to ask that
because I know you're going to tell me the truth.
Yeah, we particularly in the early days, we had. We've done fire trucks, which were actually fire trucks that were being bought and leased, which was actually a really good business idea for the guy that was doing it. It was very successful with it.
But what does that mean? So to custody fire trucks, you just pull them up in the parking lot and leave them there, or what do you do?
So it was an individual who would buy the fire trucks, through their custody account and take title to them. So we would hold the title. We didn't park the fire truck in the parking lot. And then they would turn around and lease those fire trucks in rural communities to small fire departments. They were kind of a lease to purchase, with a, basically an interest rate. And I'm not a lease expert, but, these were older fire trucks. They were already depreciated. They would buy them, lease them, get the lease payment, then sell them at the end, and made some really large returns through that. But, we've had people that have done, timber rights, was a pretty unique one, I thought. Even foreign timber rights down in Brazil and different places. We've had cattle. We've had people who were investing in cattle who would it was basically syndicated ownership in cattle. But we've done a lot of unique assets, but by far, private securities, physical precious metals, lending and loan contracts has always been one of our largest asset classes.
Where do these customers come from, right? So I'm just thinking somebody's got timber rights, somebody's got fire trucks, somebody's got cattle. Kentucky's a cool place, but are they all sitting in Kentucky? Or how do you kind of get all these customers?
Kentucky's probably one of our smallest states. We have over 100,000 clients now that we have in custody, and somewhere north of $13 billion in assets. Last I checked, I haven't checked in a few weeks or a month, so it may look a lot worse today than it did a month ago.
Depends how much Bitcoin you got on the balance sheet.
But no, it's people all over the world and all over the mostly in the United States, but we do some international stuff too. But who find their way to us because they want to invest in things they know, things they understand. I don't understand fire trucks, or I didn't understand Bitcoin when I first heard about Bitcoin either, which was actually kind of a cool story when it was first brought to us. I hadn't heard of Bitcoin, and I said, well, and somebody explained it to me, and I said, well, that sounds like nothing that's worth something. And I was like, and then it really didn't make sense to me, but my comment was, but I built this business around allowing people to invest in unique assets that they want to invest in. Whether I understand them or not is irrelevant. And so we began to look into it, and then I actually kind of I got bit by the Bitcoin bug myself, and so it's become a personal passion of mine, I guess you would say.
For sure. Do you remember the first person who came to you with crypto custody needs, or do you remember kind of some of the early people?
Yeah. So it was actually a client of ours from the precious metals world, who is still a big client of ours. It's a guy named Chris Klein, who's from the Digital IRA platform, which is by far the largest crypto IRA company in America. We still do all their custody for them. But he came to us and wanted to allow people to buy digital currency in retirement accounts. The precious metals market wasn't, I think, performing really well at that moment, and he's a real visionary guy. And he brought that idea to us, and we started working with him to build that out, and ultimately ended up building out that digital IRA platform. They own the digital IRA platform, but we're the custodian for all of it. So a lot of the early stuff that I learned about the asset was through him and folks that I met through him.
Got it. And so how do you go from pre-2015 no crypto business to, really you guys are seen as one of, if not the market leader and kind of, the tip of the spear when it comes to crypto custody, really on a global scale? Mm-hmm. How does that happen?
And
you can't say because you're smart.
No, it wasn't. It definitely was not because I'm smart. So it was, we just started building out the platform and hiring people and learning how to secure the asset, how to custody the asset, and applying a lot of the same old security and custody principles that we use in precious metals and other things, and how do you apply that? And we've been through many versions, so to speak, of how you do that, and then obviously dealing with regulators. And as we were maturing that process in our company, Bitcoin and digital currencies were maturing, through the 15, 16, and it was really good timing, call it luck, in early 2017 is when we really went public and started promoting it more, and it was perfect timing for the market. And then we launched our institutional platform in 17 to start doing qualified custody for SEC advisors and folks like that. There was a ton of people pouring into that market right at that time. We were the very first qualified custodian, the first regulated entity to ever custody cryptocurrencies. And I think probably by at least a year, maybe two, actually, before any other qualified custodian. It's only been recently, really, that there's been any other qualified custodians come into the market. So, it just grew from there. And we already had a lot of relationships from having the other unique assets for some of this. So we have some crossover clientele, right? So it allowed us to jump out pretty quick, and I think today we've got over 5,000 institutions and individuals that we hold crypto for. Which I'd say.
If I'm gonna do some back of the napkin math here, if you got over 100,000 clients and about 5,000 crypto, right? It's a growing number, right? But it's still not 20, 50, 75% of them holding crypto, but it's still a meaningful amount of the customer base.
It's our fastest growing asset class by far. We have a whole team, actually 2 or 3 teams that are focused on it. I'm very focused on it as the CEO. It's a personal passion. I love where the industry is going. So it's definitely become a huge focus, but it's still just one of the assets of many that we custody at Kingdom, which again I think it shows strength in a financial institution when you have your assets spread amongst multiple industries and asset classes. Yeah.
Let's walk through, when you guys are doing custody for crypto, what exactly are you doing for those customers?
So we're safekeeping the asset.
How?
We're storing it, so to speak. It's a word. Do you people will get into argue, well, do you store Bitcoin? But without getting into that argument, we safekeep the asset, which in Bitcoin it's the keys. It's the private keys. That's so we built out a storage solution we call the Icebox. It's not just it's KT Icebox, and it's not just a wallet. So in Bitcoin, you hear about wallets, and there is a wallet component, which a wallet is a piece of software that helps you secure your digital currency, but to really safekeep it properly and to do it in a way where you can get it insured and things, which we built the KT Icebox was built around the idea of building an insurable digital currency solution. So to do that, you have to have geographically dispersed controls, and multi-verification, multi-signature, on the actual wallet side, multiple verification on the actual how the transaction is built before it ever goes to the wallet procedures. So there's all these policies, procedures, roles that are played, geographic dispersion, to where, ultimately at the end of the day, what you want is to where no one person or even no one group of people can gain access to it, and it takes multiple people and technology to get to the asset or to move the asset, so to speak. Technology can't move it without human intervention. Human can't move it without technology intervention, and none of that can be done from any one physical place, so that so that your physical security is less important, right? So we spent a lot of time, a couple of years, building through that. We've been through V1, V2, V3, so to speak, to get to where we're at today, which is we do now have an insured, an insurable safekeeping solution. So we call it a safekeeping solution. It's not a wallet. It's an entire process, and within that entire process also is all of the audit trails and controls. We can tell everyone who touched, approved, and it all has to move through these processes to make that happen. And we've got that time frame down now for our customers where we can make that happen in a couple hours.
Wow. And part of what you guys are doing, I think, is as a custodian is you're addressing the settlement risk and some counterparty stuff. Maybe talk through kind of how what that is and how you guys address it.
Yeah, so we just in the last couple of weeks went live with a platform that we're partnered with called OTCXN.
Whoa, hold on. That was like an alphabet soup. What is that?
OTCXN.
Okay.
So we were consensus today. We've talked with I don't know how many clients today about it and have onboarded a ton of clients who are onboarding for this purpose, and it's all around we call it store it cold and trade it hot.
Okay.
So this is it's a partnership between Kingdom Trust and OTCXN, and the client can come. They put their assets into deep cold storage at Kingdom, and this can be virtually any asset. It actually doesn't even have to be crypto assets, but it's really built around crypto assets, at least at this point. So we'll use Bitcoin as an example. You come to Kingdom, you open an account, you put your Bitcoin into the Kingdom account, and then you go out into the OTCX platform, which you join. It's a very simple process. It's actually free, I think, on their side, and it's free on our side as well to start. And so once you join, you ask us to place that asset onto the platform. This is all done through automation, so to speak, and that asset is then put on the platform. So there's we already have dozens and dozens of people signing up this platform. It's basically a closed network blockchain trading software. So all these assets are held in custody at Kingdom. They're all verified before they're put on the platform, and all of those folks have the ability to trade, and we're loading exchanges, OTC desk, along with funds and fund managers, and it's all institutional, but it provides really, really great access for exchanges and OTC market makers to trade amongst themselves, to provide deeper liquidity. It also provides the ability. It takes out the way it's done on the blockchain. The assets are in cold storage, removes settlement risk, removes counterparty risk. There is no counterparty risk. All those assets are held in deep cold storage at Kingdom. They trade, and then the settlement. It's basically just book entry on the Kingdom in, so the assets never have to move. There's no need for it ever to come out of cold storage. It's always held in that insured cold storage. The only time you need to have to move it out of cold storage is if you want to redeem it for some reason, which we can do, and it's a couple-hour process as we talked about. But it makes those assets tradable immediately. So if you trade, if you have cash in your account and you have Bitcoin and Ethereum, you can go and sell your Bitcoin for cash, and you can take that cash and buy Ethereum, and you can do all of those trades in literally seconds behind each other without having to wait to move out of cold storage or settle a trade, T1, T2. It's really solving a lot of the problems that we see out there in the market.
So if this works, which I think it does, right?
Yeah, it works. Yeah, it works.
For those at home, he's looking at me like it works, dude.
Yeah, it works.
Obviously, institutions are going to be super interested in this, right?
Yeah.
I don't know how much you can talk about your experience talking to institutions, where they are in the process of coming into crypto, thinking about digital assets, maybe not cryptocurrencies, but tokenized securities, et cetera. But you sit in a really unique seat where they all need a custodian provider. And so I'm sure that you're on a short list of who they have the conversation with. What are those conversations like right now, and kind of what's your outlook for the next, let's say, 2 years or so?
Yeah, it's been an interesting year on that front, and so in 2017 we had hundreds and hundreds of institutions that we were talking to, and a lot of them opened accounts and never funded, were never achieved raising their capital, whatever it may have been. What we're seeing today is less phone conversations, but we're onboarding more clients.
Interesting.
More clients that are funding, right, and actually putting the digital currencies in their account. So
why do you think that is?
I think it's, the wheat's been separated from the chaff a little bit with the markets where they're at. And I think people are beginning to understand qualified custody and that they need a qualified custodian. They're understanding the risk of holding those keys on behalf of their clients. I think the insurance was a big deal. And, I know this has been a down market, and even at the conference today, you could sense some people that were a little nervous or a little doom and gloom here and there. I think you probably saw that as well. But for us, we're not in that position. Actually, the month of November was the largest month we've had since we've been in business at onboarding new institutional clients.
Wow!
So by far.
Yeah,
the largest
it's really interesting you say this, because I've been talking a bunch on television and writing about this idea that the institutions aren't going to come in the digital asset space, whether it's crypto or tokenized securities, on the exchanges. They're going to come in through OTC, et cetera. And actually the custodian is that layer of the ecosystem is probably one of the best ways to measure what is that institutional interest, right? And I think our hunch has been, this is both through conversations, so we've kind of directly heard it, but you talk to way more institutions than we do even, the price drawdown actually makes it more interesting to them than them chasing something that is just growing exponentially from a price standpoint.
Yeah, I've always kind of laughed at, it seems like everybody gets in when it's high, and when things go down, nobody wants in, right? And we've seen some of that through crypto, particularly on the more of the individual side. But
my partner Mark Yusko says people buy what they should have bought, and they sell what they're about to need.
There you go. Yeah. Mark's a brilliant guy, so I take what he says there. But we are. You talk about our position, and that's really probably the coolest thing about my job is we do, as you're talking about these institutions, we do talk to most of them in some kind of a way, and have accounts with most of them, to be honest. And but the other really cool thing that we get to see as a custodian is, I think, nearly every technology innovator out there in the marketplace, needs custody for whatever it is they're building. Their clients need custody in some way or another. It plays around custody. And I would say there's probably not a VC or anyone in America that sees any more of these cool innovation that's going on out there in the marketplace than we do. And so I enjoy that part of it. That's one of the things I really enjoy. I'm an entrepreneur myself, so there is some really cool stuff being built out there right now around blockchain and cryptocurrency but back to the institutions. I think the ones that have made it are funding their accounts more. They're realizing the regulatory potential issues if they don't use a qualified custodian, and so we're starting to see more of them. I think they're also starting to see the advantages of having a custodian from a operational perspective, in the fact, and this is partially things that we're working on and we're building out, like the OTCXN and many other. That's really been our focus for the last 6 months, has been building integrations with service providers that can provide our clients with what they need. So we really see, if you think about custody, this is one of the things I see about the marketplace in general is it's fragmented. Everybody's building a piece, right? You've got all these little pieces, and I don't care if it's leverage, if it's trading, if it's exchange. There's a lot of stuff being built out there, and a lot of really good stuff being built out there. But how does someone access it? And particularly institutions, are you going to go place some of your crypto over here to do this, and then move some of it and place it over here to do that? And at the center of that is the storage, right? They all need storage. Well, what they're beginning to realize, you come to the storage house, which is, we like to think of as Kingdom as the storage house, and if that storage house is integrated with all these different players, then you can leave your assets sitting there in cold storage and have access to all that. People or institutions, they're worried about going and putting their assets on exchange in a hot environment. You don't have to do that if you custody a Kingdom, but you can still trade.
Yep.
And through integration and platforms that we have. So you can choose to do that. We're directed. We'll do whatever our clients want us to do if that's what they choose to do with their asset. But there's other ways to access liquidity without risking setting it on in a hot environment. So I think a lot of people are starting to realize you come to the custodian. We don't charge much more for custody than most of your high-end, what I would call wallet services do. It's really, and you have a regulated entity that is safekeeping your funds. It has insurance. It has integrations through to many different platforms that allows you to use these different services.
Where'd the name come from?
Kingdom?
Yeah, it's a badass name. So where'd that come from?
Well, it was really built around build your own kingdom.
Okay.
Every human being kind of has their kingdom, right? And so when the name first was kind of thought of, it was control your own assets, rule your destiny was one of our slogans back in the early days. Was rule your destiny. It was this kingdom, thing with like a sword, kind of like the old days. But which is why I say our business model before crypto was around and we were involved in it, certainly was really built around a lot of the same ideas and mentality that comes through crypto as far as ruling your own destiny, controlling your own assets. So yeah, that's where it came from.
Very cool. Let's talk about the future of banking.
Yeah.
Right, because I know you've got a bunch of kind of unique ideas here in what this is going to look like, and you probably have one of the most aggressive timelines as well as what it'll happen. Maybe just start with, how do you think banking for individuals changes, in the future?
Yeah, so I think it's a big change, and I guess the way to start would be to talk about the end, or at least the end of how far I feel like I can see it. And as you said, I think I probably see that here sooner than most people do, because I've seen the technology that's being built, and we've been integrating and working with people to build some of this. So I see the futuristic bank as one entity where a customer, whether it's an institution or individual, can house or store, as you would at a bank with your cash today, all your assets. When I say all of your assets, literally it could be all of your assets, but coming in the near future, it'll be your digital currencies, top 50, let's say, you could have there, your public equities, not on blockchain, just your normal public equities. And then your tokenized securities, which is all of your private securities today, which is the world that Kingdom was we basically built our business around, whether it be privately traded mutual funds, non-publicly traded REITs, or stock in private companies, or asset-backed tokens that are backed by gold or oil or some type of commodity, and then you have your cash, right, and your fiat currencies, which could be. I think the one company we're working with on some of this has the ability to do up to close to 100 different fiat currencies, and you have all this in one place, in one account that you can pull up, see, look at on your phone, and you have the ability to not only exchange those, but exchange them amongst each other, right? If you wanted to trade your Bitcoin for public equities, you could, or your private mutual fund for fiat or ether or whatever. All these things would be completely interchangeable and exchangeable amongst each other, and also the ability to quickly without filling out a stack of paperwork this big like you do at your bank today, but to quickly leverage, borrow against those assets, leverage those assets in different ways, and even do margins and things like that. All this available in this one account. And then I think the really kind of the most futuristic kind of cool part of it is what we call the fungibility of those assets, which is the ability to take every one of those assets, flatten them down into one spendable currency that is accepted at thousands and thousands of merchants.
So it's the ultimate asset-backed currency.
Yeah, exactly.
Right?
It's back. It basically, you do it on your phone. Let's say, well, let's call it a debit card for the sake of something that we can use in an analogy. You swipe your debit card to spend your cash. With this, you swipe it and you can spend your mutual fund. You swipe it, you can spend your Bitcoin, and it's all done at a fraction of the cost of credit and debit cards. And so we have a partner that we're very deeply partnered with, who's building out this technology. A company called Vault Bank. I'm not sure if you've heard of them or not. Early stage company but the tech is basically built. Kingdom's providing all the custody and the fiat and in the background of all of that, and it's really, really cool what these guys are building out, and we're working with a lot of different lending and leverage companies that are going to be involved in all this. So it's kind of bringing the ecosystem together, and it's bringing some of those fragmented pieces we were talking about together. And that's been a real focus of mine and several of us at Kingdom Trust over the last little bit, has been working with the OTCXNs, the Vault Banks, the other guys out there that are building these security tokenization platforms. I believe that the tokenization of securities is the next big thing. And
we're going to be fast friends because I believe that for a long time, and people have been saying I was crazy, and all of a sudden now it's popular, and I'm not talking about it as much. But I'm waiting for my my victory lap on Twitter to say I told you so.
Well, it's going to come pretty quick. Your victory lap's coming pretty quick. So, well, we talked about time frame.
Yep.
That futuristic bank it won't be completed in 2019, but the basic structure of that will be out, I believe, in 2019.
You think it's like 12 months or less for the basic
12 to
structure?
18 months
okay.
for the basic structure to be out, and including the payment system part of that.
Yep.
I think you will see in the next 6 months major household name securities issuers that people probably never even think about in the blockchain world are going to issue tokenized securities in the amounts of hundreds of millions of dollars in these tokenized securities. I think that's going to happen in the next 6 to 12 months. And when one goes, the others follow suit.
Of course.
And when you look at tokenized securities, it's really, I'm a common sense entrepreneurial thinker. I'm not real. I'm not super in depth, but you look at it from the issuer's perspective, it's all good. Like, there's nothing negative to the issuers in this. And you look at it from the investors, which is the world we grew up in, Kingdom grew up in, where you sign up for these long, lockup periods and all these different things. You have no liquidity for 5 years, 2 years, 7 years, whatever it may be, whether that's private equity or just a private fund or, whatever it may be. And you look at, and then you talk to the SEC. We've met with the SEC. We've met with the CFTC. But it's a win-win-win all the way around on tokenized securities particularly when you look at non-publicly traded securities. And the great thing for Kingdom is that's I call it our old world. And then little did we know in 2014 or 15, we started building out the Bitcoin and the cryptocurrencies. We really didn't know at that time, but for the last couple of years, we've really been focused on it as we realized the power of blockchain and that our two worlds are in the process of colliding. And we feel like we're probably one of the best positioned companies in America to capitalize on that, because it's something we know a lot about both sides of that. So
absolutely. Before I get into the rapid fire questions to end this thing, I got to ask you, what's your outlook on Bitcoin? Not price, but in terms of, we've had this, let's call it shaken belief or a little bit of fear given the price drawdown. But what's your kind of outlook over the next 10, 20 years?
I think it's great. I think it's a story. If you want to say I think my outlook's good.
Okay.
I'm not a price predictor, and in Kingdom we don't give investment advice. We're directed custodians, so we don't do that. But I think blockchain in general is going to change how most everything's done, and I think that Bitcoin is right now going through what I expected it to go through, and I think most people in the market expected that you would see something similar to this, and some of them thought it would stop at going down at 6,000 or 5,000, and now people are saying 3,000. I don't know, but I know that the use case is strong. I believe in the store of value through Bitcoin. And so, I think we're going to see another run. I don't know exactly when. I would like to think it's going to be in the next 12 months. But I think it's not probably going to be quite as spiky and bubble, as much of a bubble the next time. I think we're going to see a little more of a steady up and steady down, which is good, I think, actually. But yeah, I'm a believer in Bitcoin and long term.
Awesome.
Yeah.
All right, so I got a couple of rapid fire questions, and then at the end I'll let you ask me a question, which scares me sometimes.
You didn't tell me I could do that.
Well, I warned you now.
Yeah.
And then maybe we'll take one or two questions from the audience, since they all came here to listen to us talk into microphones. What do you think the most important company in crypto is, other than Kingdom Trust? I start out real high.
Most important company. The regulators.
Ooh, we've never had
qualify
that
as a company?
for sure. We've never had that as a answer. Explain.
Well, let's say the SEC.
Okay, why?
Is probably because every company in crypto is waiting to. I would say very few to none of them want to do anything wrong. We all want to do it right. Everybody wants to do it right. Everyone's waiting for clear guidance.
Yep.
And there's a lot of things sitting on the sidelines and being held back until we get that clear guidance. And I think they're working on that. And I'm not downing the SEC when I say that whatsoever. I think they've this has all happened fast, and they've got a lot to think about and deal with, obviously, in the CFTC as well. So I think that's the most important thing, is the regulation. Right. And I don't know if there's any one company that I think is necessarily super important.
Perfect. That's a great segue into the next question, which is, if you could wave a magic wand, what one regulation would you change or improve?
If I could wave a magic wand.
You already got your own kingdom, so now you're a magician.
Well, I think it's really just clarity. Mm-hmm. It's not so much that, from a kingdom's perspective, that we have an agenda that we want a certain regulation approved or not approved. I actually can't think of one.
Just clarity.
We just want to know the rules.
Yeah.
So that we can abide by them and build out our business to be within the framework of those rules. So it's really just clarity. I think I don't know that there's any one regulation that's the showstopper.
Yep.
The main is there even any regulation?
I actually don't think there's one that's a showstopper, as much as I think a lot of people in the tokenized securities world, that's where most of the answers come in around either accredited investor laws or the hoops they've got to jump through for going public, or the Reg D, Reg A plus type restrictions.
Yeah.
it's all around securities laws usually.
Yeah.
But I think
none of them are regulations that necessarily need changed. They need clarified on how it affects this particular asset class, right?
There's a lot of crazies that have sat in your seat. You'd be surprised what people want to change.
Yeah, well,
I won't name names.
Yeah,
they know who they are.
I'm not necessarily wanting to change them. I just want clarification around them so that us and our clients can go do business.
Yep, I think that's completely fair. What's the best book or the most important book you've ever read?
The Bible.
Ooh, no one said that before either.
Yeah, that's my go-to. So, that's if you just said around crypto.
All right, what around crypto too?
I don't think I've ever read a book about crypto.
Amazing.
I've read some pieces of some books, but I'm a huge reader. But it's mostly stuff from Anthony Pompliano.
Oh, Jesus Christ! All
right.
So
I read all the new. I'm a news and article and those kind of things. But I study it every day. But a book is usually one person's interpretation of what's going on, and to be honest, if it's a book on crypto, if it was wrote last month, it's outdated anyway. So I haven't really read any books around.
All right, what one question do you have for me before we take one or two from other people here?
Oh man, I wish you'd have told me I was going to ask you that before I got here. I would have came up with a really good one to.
That's why I don't tell anybody.
What do you see as in the crypto space? What do you see as the biggest thing needed to move the asset class forward?
Time.
Yeah,
I think everyone wants all of this to happen today. I'm a huge. There's like 5 quotes, right? So there's some people who know a lot of quotes. I know like 5 because I'm not really that smart. But one of the 5 is this idea. Bill Gates says, we overestimate what can happen in 1 year and we underestimate what will happen in 10.
Yeah.
And so I tweeted the other day. I said, Bitcoin is almost 10 years old, right? From when the network actually went live. Right. We're about a month or so away from that. And if you think about it, you got tens of billions of dollars in market cap. You've got a state that accepts it as payment for taxes, right? You've got millions of people who have bought, sold, or hold, and you've got it being covered daily on CNBC, Bloomberg, etc.
Yeah, exactly.
In 2009, there is like less than 20 people in the world who thought all of that would be possible in 10 years.
It is. If you, I tell everybody to think back 12 months. 12 months ago, this industry was way different than it is today. I remember we were at the CoinAlts conference in San Francisco, which was in September of 2017.
Yep.
And we had a lot of monumental things happen right around that time within our institutional offering. And man, you just look, that wasn't that long ago. It seems like an eternity. But if you look at where we've came, when I look at where we've come since then, and look at just the industry as a whole, where it's came in that short of amount of time is nothing short of amazing. I've never seen anything like it, but I do agree with you. It takes time. Most things do. A wise man once told me that you can't hire 9 women to have a baby in a month. So
I now have 6 quotes that I'm going to use. That's awesome.
So,
I appreciate you coming, Matt. It's been awesome, and we'll have to do it again.
Yeah, it's been a great time. Appreciate it.